Hey guys, welcome to Trading the Charts. My name is Rex and this is Tesla Weekly Analysis, episode 24 for week ending March 20, 2021. On Monday, Tesla was up 2%, closing at 707.94. It was able to hold within the orange channel for the third straight trading day. The indicators continue to look more bullish as the MACD continues to rise, as well as the RSI continuing to push higher. Also, it appears the chart has formed an inverse head and shoulders, which is a bullish formation in technical analysis. By definition, an inverse head and shoulders is a pattern identified when the price action of a security meets the following characteristics. The price falls to a trough and then rises. The price falls below the former trough and then rises again. Finally, the price falls again, but not as far as the second trough. Once the final trough is made, the price heads upward toward the resistance found near the top of the previous troughs. This formation, coupled with the bullish indicators, leads me to believe that the probability of Tesla pushing higher is more and more likely. On Tuesday, Tesla was down 4.4%, closing at 676.88. It tested support at the bottom of the orange channel. If it breaks below and closes below it, we could see Tesla move back down to test support at the bottom of the green channel again. On Wednesday, Tesla was up 3.7%, closing at 701.81. It broke down below the orange channel at its intraday lows before rallying back after Fed Chairman Jerome Powell announced that he would leave rates unchanged near zero for the next 2 years at least. With the S&P hitting new all-time highs, it's looking more and more bullish for Tesla and the overall market. After we saw the rotation into value stocks the last couple of weeks, some buyers are returning back to big tech stocks as they're beginning to recover. This shows the strength in the overall market as it broadens out, thus indicating that we are less likely in a bubble and that the bull market will likely continue. We could very well see Tesla move up to test the 50-day moving average at around 775. This 775 level is also where the bottom of the red channel and top of the orange channel currently converge at. This will be a critical resistance level that Tesla will need to overcome. On Thursday, markets sold off, taking Tesla down 6.9%, closing at 653.16. The bottom of the orange channel continues to be a major battleground for Tesla as it continues to trade above and below this line. Today, it closed below this line, which is less bullish. However, as I mentioned, Tesla has formed an inverse head and shoulders pattern, and it appears it is still trying to form that right shoulder. The MACD is still looking bullish as it's above the signal line, however, it is starting to roll over. Also, the RSI is still bullish, but it is starting to pull back. We'll see if it could put in a higher low. On Friday, Tesla was up 0.3%, closing at 654.87. Tesla tested resistance at the bottom of the orange channel at its intraday highs at 657. The inverse head and shoulders is still in play here as long as Tesla moves up going forward to complete formation of that right shoulder. To complete formation of that right shoulder, Tesla must break back into the orange channel above 657, then rise to 695, which is where the neckline is of the head and shoulders. A break above 695 would confirm the completion of the inverse head and shoulders, after which Tesla would rise substantially, hitting the next resistance level at around 771, which is the 50-day moving average. This 771 level is also where the bottom of the red channel and top of the orange channel both converge at currently, thus making this 771 level a very critical resistance level. To the downside, if Tesla fails to complete formation of the right shoulder of the inverse head and shoulder, it could head down to retest support at the bottom of the green channel at around 575. If that 575 level of support breaks, the next major support would come at around 499, which is the 200-day moving average. So those are my price predictions for next week. Bull case, if it could break back above 657, it'll head on up to 695 to complete formation of the inverse head and shoulders. Then it'll shoot up to resistance at around 771. Bear case, if that inverse head and shoulders fails, it'll break down to retest support at around 575. And if it breaks below that level, it'll test support at 499. Thanks for watching, guys. Please hit that thumbs up if you enjoyed the video and subscribe for more content.